Good Friday, ladies and gentlemen. Forex market situation update. Back in action for the last time. This week, we got the New Zealand Japanese yen under the microscope today. We want to talk about this ongoing relationship we've had with this pair. It's been a few days since last time we've been here. Last time we've been here, I was actually announcing a flip over because we were bearish on the New Zealand Japanese yen for quite some time. But then when it spiked 81.31 here and backed off and started to turn around, we felt like there was a technical correction in the making. So we basically went against the trend. But yeah, we knocked off that target. It was 84.40. Price action reached, it climbed all the way there, touched base. That's where we had our profit target. We got out, and then we took the back seat. Basically, we waited for a couple of days, and this is what we saw coming on yesterday, right? Yesterday was a huge drop. Price action was nosediving, nothing short than that. And not just the New Zealand Jap, all the Japanese yen currency pairs took a dive. But this was an unusual type of move, right? Very aggressive on the downside, which gave us the created the assumption that this is no longer going to go upwards. If anything, it's coming back. It's resuming the original downside trend. Today, when we opened up the market, we saw price action closed where it closed yesterday, and immediately we pulled the trigger. So we're basically flipping over once again, right? This is the second flip over on the New Zealand Japanese, but this time we're basically reverting back to the original game plan. Because if you remember, right off the bat, I said that even though 81.31 was our primary target back when we had that bearish campaign, I was certain that price action was going to go beyond that point. Right, I was talking about the previous lows. I was talking about some projection levels that I was able to apply, right? And I'm going to talk about these two. But in a sense, the fact that price action didn't take those previous lows, but it did take the previous high, was the main factor that I was using to deliver the case here, right? So I was saying pricing is going to go beyond, but we will be given a lot of respect to 81.31, and that's what we did. We got out. And we felt like there was going to be some form of technical correction, which was, right, up until a couple of days ago. So we think price action is back on the downside big time. We decided to use two targets, to spread our targets, basically, to two different key levels. The first one was the familiar level of 81.31. It's probably the safest bet here to assume that pricing is going to go right back to that level, challenge that once more, probably this time break through, right? So the first trade we pulled here, we initiated, it was addressed to 81.31, but the second one, which was literally minutes ago, we threw in the second trade. This one is already addressed to 78.78, right? 78.78. I'm going to talk a little bit about these levels right here at the bottom. 78.78 is a simple 123.6 Fibonacci projection, 123.6 taken off the previous major opposite move from bottom to top. The second one, the deeper one, 78.51, I hope I'm not wrong about that, but you can easily check it. 78.51 is the result of a measurement taken from the previous opposite move, not the major one, the secondary one, the shorter one, from bottom to top. Again, this time 223.6, another one of the famous Fibonacci projection levels, and both of them are very close to each other. So we want to call this an area, a range, or just a range of a target, but obviously we're going to use the closer one, which is 78.78, right? So we're going to work with these two levels all the way through. All right, every next trade we're going to be throwing in is going to be addressed to 78.78 again. The only way we're gonna ditch this position and this bearish campaign is if price action is gonna find it very difficult to break through 81.31. We're gonna see that happening, and once it does happen, we're probably gonna look for the exit and call it an exit. So that's pretty much where we are right now with this one. We decided to use that same 84.40. We basically recycled that level. We had that level as a target, but right now, this time, we're using it for a stop loss level. Our stop loss level is right there at 84.40. Alright guys, so there you go. Interesting stuff, no doubt. We will be back as soon as early next week to follow up on the situation. Of course, we'll keep you posted. That's about that for this one. Moving on to the next video. See you there.